Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting Asian Session Live Market Analysis for this day and also for the week 16th to 20th of June. So we are on 16th of June. So let us try to understand how exactly the market is making a move and what are the trading opportunities we might come across in this week. Now to start with, I'll give the derived forecast and also the expected range in the market later on, and then we'll go in for the market reading technique. Now, this is the third week of the month. The market is expected to make the trending move. And during this time, the market is expected to make a downward trending move in this month. And it may appear that Euro and GBP appear bullish, but the players are expected to make the USD gaining move in this particular week. So we might come across the week beginning false move during that of the European session, and then subsequently they are expected to make the slide in the case of Euro and GBP. So after the week beginning false move, they are expected to make the slide, and tomorrow again they are expected to make the swing and slide. Then Wednesday, you could come across that the market try to make the slide, and afterwards, during that of the US session, the FOMC announcement, they are expected to firm up and then make a big slide afterwards from 19th. So from 19th, you could come across more visible slide. Then on the last day, 20th of June, that is Friday, they are expected to swing lower and then firm up towards close to make the week beginning false move on 23rd again on the upside, and then try to make the drop. Then the last day of this month, that is 30th, they are expected to make the swing and slide move. And the first week of July also, we could come across that downward move with a, lower level swing with a downward stopping before making further rise in the market in the month of July. So the market is expected to make the downward move in the month of June and then reverse in the month of July. So it may appear that already GBP has gone up to almost close to 1.70, but they are expected to just make the slide in the case of GBP also. You know very well, they use GBP to create the market sentiment and later on act against the traders. And that is what they are trying to do it in the market. And when Euro has started dropping, then a lot of traders have taken the sell positions. And then in order to induce them to come for the short covering, they gained the levels in the case of GBP. And also in order to handle Euro GBP cross, they just dropped Euro and gained quickly the levels in the case of GBP. As a result, Euro GBP has come down to that of 0.80 level, and which we envisage long back. After coming to that of 82 area, they are expected to make further downward move to that of 0.80. Then they started making the downward move in the case of Euro GBP. They could rest around 0.78 and then consolidate and start gaining the levels again to that of 0.82 in the case of Euro GBP. And you know that Euro GBP is a cross wherein the PIP value is very high. So the players from time to time focus on Euro GBP and try to make huge profits when the traders commit positions, because most of the traders commit positions there. The spread is very low, and if you hold the position for some time, then we'll be able to book profit. That's what many of the traders try to do it, which is considered as a safe trading currency because it may make about 30-40 pips away from you, and then subsequently when it makes a move in your favor, we will be able to book profit. And they don't make normally about 100-150 pip swings in the case of Euro GBP. But there are days wherein they have done such moves also in the case of Euro GBP, but that appears that will be very rare phenomenon. So otherwise, Euro GBP is considered as a safe currency to trade. That is why a lot of traders in Europe commit positions in Euro GBP and try to earn money holding the position for 2-3 days. So you'll come across in this week more slide in the case of Euro and GBP. And that will be able to uh, give us the players create the market sentiment and act against that of the traders. So they created the bullish feel by gaining the levels in the case of GBP, but they are expected to make the slide. And as per my estimate, they are expected to go above that of 0.707172 only by next month. Let us see how far they are doing it. Now, with regard to that of the levels in which the currencies are expected to make the swings, euro formed the low 1.3521, the high there just gone up to 1.3544, and the 42 was the low, and they just breached the high. And actually here what is shown is Friday high, 35.79, but actually 35.42 was the initial high, and they've gone above that, and now by about 2 pips. Then in the case of GBP, it is expected to come down from 69.75 to 65.50 area, and currently the low is 69.70 and the high is 69.86. They are not breached the high in the case of GBP, but they have made a brief upward stopping in the case of euro. Then in the case of yen, they just made the downward stopping, and 101.782 was there, and then subsequently by there, they dropped about 10 pips, and 101.75 would be the low, and they're expected to come above that of 102 soon in this week. And USDCHF, you can notice that it was consistently and slowly gaining the levels every week about 50 pips, and now you find that 89.94 they are shown, and then subsequently breached by 2 pips because euro also cut the high, and 89.75 would be the low and 91.75 would be the high. And in the case of Canadian dollar, they just consolidated around 1.0850, and they're expected to just breach the low by 2 pips, and they're expected to consolidate here and just firm up to above 1.10. Then afterwards, you will come across more quick gains happening in the case of USD CAD. Then Australian dollar, the week beginning false move, they had just done it above that of 94.05. That was the initial low, and then they just gone up to 94.10, started making the slide, and they just used this sort of 5 pips upward swing in order to create the bullish feel among that of the traders. But actually, they are sellers. So you'll come across the middle level consolidation with the drop in the case of euro, and higher level consolidation in the case of GBP with a swing and drop, and lower level consolidation with upward move in the case of USD and USD and USD CAD, and the higher level swing with a downward move in the case of Australian dollar. These are all the expected move in this month. The expected trends in these currencies, the majors, the 4 majors and 2 commodity pairs. Now, coming to the market reading, as I shown you that in the case of euro, they just breached the high, 25.43 by 1 pip. And in the case of GBP, they have not breached the low or the high. And in the case of yen, they just breached the low by about 10 pips. 101.82 was the initial low. They came down 101.72 as a week beginning false move on the downside in order to make an upward move later on. And 89.94 was the low, 89.92 they formed and holding there, and 90.06 is the high. And they are expected to make a brief downward extended move in the case of USD for about 2 hours and then start gaining the levels again. Similar to that other move they are doing on the upside in the case of euro. Then in the case of Canadian dollar, they just breached the low by about 1.0852. That is the initial low. They just breached it by 2 pips, and they are holding there to gain again, start gaining the move above that of the high because the spread is very narrow. Then Australian dollar, 93.84 is the low, 93.05 is the high. They just breached the high and went up to 0.9410 and came to that of 94.05. And soon you will come across as you start making the slide from this session. So the week beginning false move could be just seen in the case of the majors during that of the mid-Japanese and the mid-European session. Afterwards, they are expected to make the downward move. So we try to take sell positions whenever they are firming up and make a brief upward stopping above the high when the spread becomes more than 40 pips between the low and the high, and then try to see that we are able to easily see profit in such trades. But when the spread is less, then we wait for the spread to increase and later on commit positions. Then we sell near that of the high and keep 30 pips hedge order to limit the risk. And once the position makes profit, we try to move stop to entry and remove the hedge order and try to trail the stop in profit making position. Use the hedge order in the loss making position. And then try to keep about 45 to 75 pips limit or take profit order. And whichever is hit, we will try to accept either minimum profit when the trailing stop is hit or the maximum profit when the take profit order is hit. So that is how we try to protect our equity and also protect our trade during this volatile moves of the market, because it is next to impossible to watch every move of the market all the 24 hours. So we need to have the rest. As human being, we cannot continuously work for more than 10 to 12 hours. And afterwards, our concentration will go down. We may be awake, but the concentration will come down. So in that, keeping awake is as good as sleep, because you are bound to miss various opportunities and you might realize it later on, but you may not be able to quickly take a decision and take positions. So what my suggestion will be, just do a normal routine life and try to watch the market casually without giving much of a strain to yourself, so that you'll be able to really enjoy trading and you'll find that the trading is a great pleasure and also making profit. But instead, you try to take position and wait for the market, and it may test your patience. Instead, you wait for them to make an upward stopping or the downward stopping, and then try to take the position. You'll be able to quickly grab the profit and say bye to the market and attend to other work. And later on, when the next event of data release comes, you can come back to the market and try to take some positions. That way, if you try to do the trades, you'll find that market is really an enjoyable condition, watching the market. Don't make it as a stressful and painful event, because we all come to the market in order to earn money. And if you want to really make a positive growth while staying in the market, we need to be cheerful. So if you are moody and nothing can be achieved, and only if you are cheerful, your mind is able to think of and also look for various possibilities, and various opportunities are being recognized. As a result, you will be in a position to take some positions and book profit. And also use the hedging order to limit the risk. And don't think that if I keep the stop, they will hit the stop. Instead, keep the hedge order. If they are hedged it, handle the hedge properly, and whether the hedging is making profit or not. And if the hedging is not making profit for 30 minutes, then try to close it and keep another hedge order 10, 20 pips away and watch calmly, so that if they hit it, also again cut that after 30 minutes and then keep another hedge. Then once they reverse, you'll be able to really make money from out of the original position. And in the event, if the hedging is filled and the hedging makes profit, keep stop at entry in the hedging and let them make the move against you and try to book profit on the buy side, on the higher side. Then later on, keep another hedge order and then try to trail down, and your sell position also you can book profit. That is either way trading. So mentally prepare yourself whether you want to do either way trades and whether you want to do only one-sided trade using the stop, so that your mind is very clear and it does not all the time look for how to read the market, because you become very clear with regard to the market moves and also follow the timings given here, then it is easy to track the market. And once you are able to track the market with regard to the type of moves they are doing it during sessions, early, mid, and the late sessions, and also the gap time, and how exactly during the data release they try to make the false move to start with, and then the spike. You'll be able to follow all those things very clearly. And also keep in mind, you will look into the currency only after they make about 40 pip spread between the high and the low. Until such time, you will not commit positions in that. That means the players are envisaging low volume, so they are not interested in increasing their spread. Once the volume increases, then they try to increase that high and the low further in order to trap the traders who are committed the positions. So they keep it in a narrow range in order to induce the traders to commit positions. So at that time, don't become victim of their act. So if you've got any questions, you can kindly ask me. I'll answer to those questions. So I'll keep the focus page. Judge Rehan has got a question. GBP and Euro is not dropping. Yeah, after making a brief upward move in the case of Euro and GBP as a weak beginning false move, they will try to drop Euro and GBP. See, they are only holding. And if it is really bullish, what they have to do, not hold it. They have to continue to gain the levels. If they simply hold it, that means they are doing only circular trades and keep the buy order here and keep the sell order. And if they don't remove the buy order, everybody is afraid of selling to this level. And then afterwards, the traders automatically buy here. And they keep the sell orders here. So without your knowledge, because of the bullish feel, when the players are selling, you are buying. That is how they try to do it. And if they are really bullish, that means if they want to really raise the levels, they could have cut the high and gone above and increased the spread and gone above 1.70 or 7050 and things like that. Nothing prevents them. They can do it if they want. But their aim is to make money, not to show simply the levels. They show the levels in order to frighten the traders. They show the psychological levels to frighten the traders. And it is not their mandatory condition that they have to show such highs or lows in the market. They try to do it in the process of trading. And that is why you don't come across those levels are not being sustained for a long time. Okay. Lam Shelley, does Carney's bullish GBP comment affect what players intend to do? See, first of all, understand one thing, the players make the moves in the market depending upon the traders committing positions. It is not based on that of the events. They may make moves to that of the events, but ultimately they will saturate the market depending upon the traders committed positions. So these things can be used as a trigger. Any speech or data release or whatever it is, that could be used as a trigger. Even the rumor can be used as a trigger by the other players in the market. But ultimately, they try to make such big moves, mainly to trap the traders, mainly to induce the traders to do short covering or long liquidation. And for that, the players need to commit, the traders need to commit positions. If the traders are not committing positions, then they will not make even big move if any big events happen in the world. So that is the market. So we are asked to follow the market based on the events happening in the market. But the players make the moves in the market depending upon the traders' committed positions. See how cleverly they are handling it. So they induce the traders to commit positions After the drop, the traders become bearish and sell. After the rise, the traders become bullish and buy. And afterwards, the players trap them. So you forget about your common sense, buy cheap and exit when it is expensive. But you just do opposite to that of it, buy when it is expensive and sell when it is cheap. That is the main reason that most of the traders lose their money in the market. Then it might be considered as a breakout trade, but later on you come across many people call it as a false breakout. So ultimately, when the players do a brief upward stop and above that of the euro, above the initial high, and come down, say 2-3 pips, and if you are in a hurry and try to buy because it has gone above that of the support and go above that of the resistance, staying there, if you immediately buy there, then you find afterwards it is not going up. They start making the slide. So ultimately, what is more important is the exact level. Because if you look into the 5 minutes chart, that exact level of high and the low will not be shown. And you'll come across only the half an hour high, the average of the half an hour high, 15 minutes high or 10 minutes high, depending upon the chart you use. And there will be a line from there that is the standard deviation line, and people call it as simply a noise. But actual level, they are not in a position to find out from that of the charts. So what is more important is the players are not such hardworking people because they have got the money and they wanted to enjoy luxury and they don't squeeze their mind and work for longer durations, etc. They only ask others to do the work and they enjoy themselves. So in that process, what happens? They only look into that of the live market code page and then try to take decisions and pass on the decisions to the other bank dealers. So what is more important for us is whatever the tool they use, we use the tool. Whatever the method they do, we follow the method. Nothing more than that. Because it's men trading against men. So if the men are fighting with a specific type of gun, you should also use specific type of gun in order to encounter them. Rather than that, if you try to use some other type of weapon, you are not going to use it effectively and it may not reach the target. Faisal, what do you think? To which limit crude can? Okay. Yeah, crude is also expected to come down drastically. Before that, they are making an upward gaining move using the sentiment from that of Iraq. An Australian dollar can move to upward direction. Aussie is also expected to come down. Then please elaborate how to handle the indices if we use hedge strategy. See, as far as indices are concerned, and there again you come across, we will be trading only in the case of futures. So when you are trading in the case of futures, we will not be able to hedge it with the same pair. So what you have to do it with a different time frame. Suppose you are taking the June futures, then you have to hedge it with the July futures. And that is a different story altogether, and which is beyond the scope of this webinar. Then Chowkir, are you expecting GBP rise above 1.70 level before the drop? See, such a crucial level, it's hardly about 15-20 pips away. No? And see, nobody will be able to give an exact prediction whether GBP will go another 20 pips up and then come down. Because it is a psychological level, it's easy to ask 1.70, will it go up or come down? But you need to understand that if a lot of traders are willing to sell at 1.70, or there are a lot of sell orders there, then that of the stops, the players are not going to reach. If there are a lot of stops above 1.70, then the players will try to hit the stops and come down. But you know that at that time, when they are making a move of that nature to hit the stops, they use specific type of orders. And with the help of that order, they will not buy, they will only hit the stops. So in that, if you try to sell, your platform might give the slippage. So don't aim to trade by taking the positions at the extreme levels. It may be possible or may not be possible. But what is more important, after taking a sell position, whether the market will come down or not. So for that, we need to wait for the early and the late sessions. Then you will find if the early session you commit position, and if you find the trend is swing and slide, then late session you will be able to book profit. So understand, till such time they don't make the spread of 40 pips between the high and the low, don't think of committing positions, and it will be only testing your patience. So if you have the clear understanding of the market, then you will not become uncertain at any given time. Any other questions? This week and next week, the market is expected to only slide. And the week beginning falls through, they are just firming it up. In the case of GBP, just because from 1.68 to 1.69, they come up to, and everybody turned their feel. But all other currencies, euro from 1.67, 1.66, it has come to 1.3736, it has come to 1.35 area. And yen is hovering around in that 102 area. Then CHF, from that of 0.8788, it has come to 89, and now to that of 90 area. In Canadian dollar, which is not at all coming down, it is in the range of 1.08 to 1.09. In Australian dollar, it has gained only about 25 pips than that of the previous high. It is shown the psychological level 0.94. But only GBP, they gained about 100 pips, and which has really created confusions among that of the traders. So they know very well how to confuse the traders and induce them to commit positions and later on trap them. In Faisal, actually I was asking that how can we use hedge strategy? As you said, it is us that have to decide either to use hedge or stop strategy. Okay. See, as far as the stop loss or the hedge are concerned, the condition is the same. If you use the hedge, the position is hedged, the money is blocked. Anyhow, it has taken from that other free margin. And only thing is, it is shown somewhere. And if you, the only advantage of hedging against that of using the stop is we will be holding the position. Whereas if we use the stop, we will not be holding the position. So if you don't have the position, you have got a strong mindset, you can re-enter into the market. Otherwise, the holding position, you can try to handle it properly and earn money. And that is the only difference of using the hedging and using the stop. So how can you make profit from that of the hedging strategy? See, first of all, you have to understand the hedging can be used instead of stop. So that when it is the position is hedged and the position is not, hedging is not making profit, you close the hedging with 2, 3 pips or 5 pips loss and keep another hedging order to limit the risk. As a result, what happens? You hold the original position, and when the hedging was filled, you are able to understand that it was filled only during stop entry. Even if the hedging is making profit after being hedged, and what you can do, keep stop at entry in the hedging and let the market go against us. Let it go for 100, 150 pips. Then you book profit in that of the hedging, like how they are done it in the case of GBP. And after booking profit, you keep another hedge order above. Then let them start making the slide, because they cannot continuously rise or continuously drop the market. In that case, they will not be able to trap traders, because everybody will become bullish and everybody will take long And the players are not here to give profit to that of the long holders. So automatically they drop. So that is what we try to read whom they are going to trap at a given time. So if they use the hedging on the upside, you can book profit on the buy side. Then later on, when they start making the slide, we can book profit on the sell side. Otherwise, take another hedge and close both the cells. Take another cell and close both the cells below their average and earn net profit using the hedging. So ultimately, what is there in trading? We need to have the positions, and the position should be in the money. So if it is hedged, one position will be in the money and the other position will be out of money. So whichever the position is making profit, you book profit, and the other position you wait, it will also come in the money. That is the basic idea of using hedging. But for that, you need to commit very less position so that when the market continues to make for 2-3 days on one side, you don't become perturbed. You don't lose your patience. Okay. No more questions. So the expected market moves for this week. So they are expected to make the swing and slide and a little bit of firm up here and there. And ultimately, you'll come across more slide happening on Thursday and Friday in the market. And then Friday towards close, they are expected to firm up. On 19th, I'll come back and try to review the forecast, what I have given it till this, and try to find out what could be the possible moves on 19th and 20th, and also the next week based on the developments happening in the market. So with regard to the levels, this is the range, and it is a long-term range till end of this month. So you try to find out how exactly they are going to make the moves, and probably they could extend this downward move till first week of July, and then try to make the upward move after accumulating more and more of the buy positions at the lower levels. So ultimately, what is more important for them is earn as much as possible irrespective of the volume. The volume is less, then they try to make prolonged consolidation and later on try to make the big moves. That is how they handle the market. And trigger Euro Yen to drop before the rise. So as far as Euro Yen is concerned, Euro is in positive net change and USD Yen is in negative net change. And so they are doing the USD weakening move to start with the majors. And also the commodity pairs, they are showing USD weakening move. And later on, you will come across, they will just do the USD gaining move. In such a situation, the spread between the high and the low will be very narrow. In the case of crosses, when the spread becomes more than 70 pips, we try to commit positions, we'll be able to earn easily. And as you said that they are expected to make a brief downward stop in the case of Euro Yen, and then later on, you will come across USD Yen is expected to gain more levels, and Euro is expected to slowly come down. So as a result, Euro GBP is expected to slowly gain the levels. In any, why are the current volume low? Because when the traders continue to lose money, they go away from the market. And the new traders who come in always commit cautiously. They commit lesser positions. And I remember that about 4-5 years back, and the traders used to tell me what is the equity they have in their account, 100K, 200K, 50K, and things like that. Now you $1,000 or $5,000. And there are many of the traders holding account, holding about $500, $1,000, $200, etc. And as you see, when the brokers announce that they are willing to accept a trader opening an account with $200 or $500, that means they are desperate in attracting the clients. And later on, when the clients come, then they induce them to increase their deposits. So that is what they are trying to do in marketing. First, let them commit, and later on, we can ask them to increase the investment. So till such time, they don't make stop-ins for them. So that the small trades that the traders do and earn, Later on, they put about $500, $1,000, and they are trapped. And the account is closed by the robot brokers. No more questions? So I take this opportunity to thank FX Trade for the facilities provided to present the webinar. And thank you people for your patient listening and understanding of the market. And I'll come back on 19th June and try to review the forecast, what I've given it, and also try to give more presentation with regard to, or more analysis with regard to the market on Thursday and Friday. So until then, bye. Wish you all very happy trading and try to understand the market well and calmly trade. Market is known to reward patience and not impulsive act. Thank you.